Have you ever wondered how you can build wealth with dividend growth ETFs? Let's begin by defining what dividend growth ETFs are. These are exchange-traded funds that focus on stocks of companies known for their history of increasing dividends. In simpler terms, it's a basket of securities that you can buy or sell through a brokerage firm on a stock exchange. Now let's dive a little deeper into the concept of dividends and their potential for growth. Essentially, dividends are a portion of a company's earnings paid out to shareholders. And when we talk about dividend growth, we're referring to these payments increasing over time. Investing in dividend growth ETFs can be a smart move for several reasons. Not only do they provide an income stream, but they also offer the potential for capital appreciation. Plus, they're a great way to gain exposure to a diversified portfolio of dividend-growing companies. Now you might ask, how can we truly capitalize on these dividend growth ETFs? Building wealth with dividend growth ETFs is not as complicated as it may seem. It starts with choosing the right ETFs. This choice should be based on key factors that can influence your returns over time. Let's delve into these factors. First, consider the track record of dividend growth. ETFs that have consistently increased their dividends over time are a good bet. This growth signals a strong and profitable underlying business that can support these payouts in the long run. Second, keep an eye on the diversity of the ETF's holdings. The more diverse an ETF's portfolio, the less risk you're assuming. If one company in the ETF faces trouble, the impact on your overall investment is minimized. Look for ETFs that invest across a broad range of sectors and industries. Third, and certainly not least, is the ETF's expense ratio. This is the fee that the fund charges for managing your investment. A lower expense ratio means more of your money stays invested, which can make a significant difference in your returns over time. Once you've chosen the right ETFs, the next step is to reinvest your dividends. Reinvesting dividends allows you to buy more shares of the ETF, which then generate their own dividends. This is the magic of compounding growth. It's like a snowball rolling down a hill, growing bigger and bigger over time. But remember, this is a long-term investment strategy. It's not about getting rich quick. It's about building a solid financial foundation over time. It requires patience and consistency. You'll need to stay invested through market ups and downs and keep reinvesting those dividends. In essence, building wealth with dividend growth. ETFs is a journey. It's about making smart choices, reinvesting your dividends, and giving your investment time to grow. It's a strategy that rewards patience and discipline, and it's a strategy that can help you build a more secure financial future. Remember, the key to building wealth with dividend growth ETFs lies in patience and consistency. Now that you understand the process, let's make sure your journey is as smooth as possible. First off, diversification is key. Don't put all your eggs in one basket. Spreading your investments across different dividend growth ETFs can help mitigate risk. It's like having a safety net under your financial tightrope. Secondly, consider investing regularly. This is not about timing the market. It's about time in the market. Regular investment allows you to take advantage of dollar-cost averaging, smoothing out the highs and lows of market volatility. And lastly, stay informed. A savvy investor keeps an eye on market trends and changes in the ETF's holdings. Knowledge is your greatest asset, and the more you know, the better decisions you can make. With these tips in mind, you're ready to start your journey towards wealth building with dividend growth ETFs. Indeed, building wealth with dividend growth ETFs is a viable and rewarding investment strategy. We've journeyed through the basics of these ETFs, explored the process of accumulating wealth with them, and even delved into some tips to make your investment journey smoother. Remember, it all starts with understanding what dividend growth ETFs are and how they work. Then, gradually build your portfolio, focusing on long-term growth rather than immediate gains. And of course, diversification is key. It's your safety net against market volatility. Don't forget the tips we discussed. Be patient, remain consistent, and keep an eye on the market trends. Investing is not a race, but a marathon that requires endurance and strategic planning. With dividend growth ETFs, you're not just investing in a financial product, you're investing in a future of financial freedom and stability. So take the leap and start exploring the world of dividend growth ETFs. If you found this video helpful, please give it a thumbs up, subscribe to our channel, and share it with others. Remember, your journey to financial freedom starts with a single step.